we are kicking things off with the latest market movers. Microsoft Corporation, or MSFT, is trending on the most searched stocks list, and we have the facts you need to know before you bet on this software giant. We're diving into the earnings projections and analyst revisions that are shaping the future of this powerhouse company and whether its current valuation is truly reflecting its potential. Is happening in real time. We're looking at how Frank Datch System Technology is using a model-driven Power App integrated with Microsoft 365 and Teams to streamline complex order approvals, and don't miss the full breakdown. Stay with us for the rest of the news. Microsoft Corporation, ticker symbol MSFT, is currently trending on search lists, prompting investors to examine key factors influencing its near-term performance. Over the past month, the stock experienced a slight decline of -0.2%, contrasting with a 5.6% gain in the broader Zacks S&P 500 composite, although the computer software industry sector saw a 3.9% increase. The analysis prioritizes changes in earnings projections, as the fair value of a stock is determined by the present value of its future earnings stream. This assessment is heavily influenced by how sell-side analysts are revising earnings estimates. Increases in these estimates typically lead to higher stock valuations, driving investor buying activity. Microsoft is projected to report quarterly earnings of $4.21 per share, marking a 15.3% year-over-year increase. The Zacks consensus estimate for the current fiscal year stands at $17.33, reflecting a 27.1% year-over-year growth, with a recent upward revision of +13% in the last 30 days. For the next fiscal year, the consensus estimate is set at $19.29, indicating an 11.3% growth compared to the previous year, with the estimate changing by +26% in the past month. Microsoft demonstrates strong revenue momentum, with consensus sales estimates for the current quarter at $87.42 billion, showing a 14.4% year-over-year increase. Reported revenues for the last quarter were $82.89 billion, a 18.3% year-over-year rise. The company has consistently outperformed consensus expectations, beating estimates for both earnings per share and revenue across the trailing 4 quarters. Utilizing the proprietary Zacks rank tool, which incorporates earnings estimate revisions and other factors, Microsoft currently holds a Zacks rank 3, indicating a hold rating. This suggests that in the near term, the stock is expected to perform in line with the broader market. Valuation metrics also play a crucial role. The Zacks Value Style Score grades Microsoft as a C, suggesting it is currently trading at par with its peers. Investors are advised to weigh these fundamental indicators against valuation multiples, such as PE, PS, and PCF, relative to historical data and industry peers to determine if the stock is fairly valued or warrants further attention. Microsoft is set to discontinue its unique Together meeting mode within Microsoft Teams, a feature designed to foster a more community-like experience during virtual calls. Launched in July 2020 amid the shift to remote work during the COVID-19 pandemic, Together Mode aimed to move beyond the standard grid view by placing participants' video cutouts into virtual settings, such as a theater or coffee shop, to simulate a real-world location instead of a home office. The feature requires a minimum of 4 participants to activate, though it has the capacity to support up to 49 users. However, Microsoft has announced that it will begin phasing out Together mode as of June 30, 2026, with beta users potentially seeing the removal sooner. Microsoft cited the decision as a move to simplify the user experience and enhance backend performance. The company stated that removing the feature will free up service capacity to reinvest in foundational video improvements, including super resolution, denoising, improved color accuracy, and better performance on less powerful devices. Furthermore, Microsoft indicated that the removal will streamline the interface, requiring fewer clicks to access desired views, and suggested that users dissatisfied with these changes switch to gallery mode. Billionaire investor Bill Ackman has publicly disclosed that his hedge fund, Pershing Square USA, has established a core position in Microsoft, despite previously selling a majority of its position in competitor Alphabet. Ackman is arguing that current market fears surrounding Microsoft, particularly concerning the software as a service or SaaS sector and its dependence on OpenAI, are overblown. The primary concerns cited include the SaaS-apocalypse, stemming from the fear that advanced AI models like Anthropic's Claude Code could erode the economic moats of software companies. A second major fear centers on Microsoft's reliance on OpenAI for its AI products like Copilot and the growth of its Azure cloud platform, especially as competitors like Gemini and Anthropic close the gap in AI capability. Ackman counters these fears, asserting that Microsoft's strength lies in the bundled nature of its M365 productivity suite, which leverages security and compliance for resilience, and its ability to transition to usage-based pricing models, drawing on Azure experience. Furthermore, CEO Satya Nadella's increased involvement in Copilot's research is noted. On the Azure front, Ackman views fears over OpenAI and contract restructuring as misplaced, framing Microsoft's strategy as a calculated diversification. He points to Microsoft's significant investments in Anthropic and the strategic value of its stake in OpenAI, which secures a substantial portion of Azure's remaining performance obligations, RPO. Crucially, a key differentiator for Microsoft is its vertical integration strategy. Unlike many peers, Microsoft possesses the financial and technological capacity to develop custom AI models and design proprietary inference chips. The company has recently introduced custom models like MAI, Transcribe 1 and Maya 2 inference chips, which reportedly offer significant cost advantages by bypassing the high-margin GPU expenses associated with competitors like NVIDIA. This ability to integrate software, custom LLMs, and hardware positions Microsoft as a strong contender in the age of agentic AI. Despite market headwinds, Microsoft currently trades at approximately 21.8 times forward earnings estimates, leading analysts to view the stock as a strong buy at current valuation levels. Rodo Frank Dach System Technology, Rodo DSD, has successfully standardized its complex annual risk management process involving approximately 2,000 individual order and credit limit approvals by implementing a digital solution leveraging the Power Platform and Microsoft 365. This initiative was driven by the need to replace a heterogeneous legacy process across its 10 international companies, necessitated by the unbundling of it at the group level and the upcoming transition from SAP ECC to S/4HANA. The company opted against a full SAP implementation, recognizing the sunk cost risk, instead choosing a pragmatic, low-code approach that integrated seamlessly with their existing Microsoft 365 environment. The solution is a model-driven Power App connected to Microsoft Teams, designed to interact directly with SAP, which serves as both the data source and the final system of record. Key requirements for the new process included triggering approvals from SAP, ensuring intuitive integration for users across mobile devices, and maintaining strict adherence to internal control systems, such as the dual control principle, with all documentation archived as a PDF in SAP. Marco Schneider, head of financial accounting at Rodo DSD, praised the pragmatism of the implementation, noting that the iterative, low-code development provided quickly tangible results while focusing on user benefits. The Power App efficiently assigns approvals based on data-driven criteria, considers various thresholds, manages escalation levels, and supports multiple languages and currencies. Crucially, the design prioritized usability, allowing users to interact independently or within the familiar team's environment, minimizing the need for extensive training. This approach ensured harmonization across the division while avoiding the imposition of new, burdensome workflows on staff. The project was executed efficiently by the Power Platform team at Net at Work, which provided a hypercare approach during commissioning and a managed service agreement for ongoing maintenance. The collaboration resulted in a successful implementation within a few months, leading to a fully documented, transparent, and efficient approval process. This success underscores a key IT principle at Roto DSD, reducing complexity by concentrating on established platforms. By leveraging the synergy between SAP and Microsoft 365, the company demonstrated that cross-system requirements can be met efficiently and user-friendly within the modern workplace, effectively integrating third-party systems into the familiar user environment.